good afternoon everyone.
Good afternoon.
Okay class, as we promised before this, I already asked you to study about I-Etf. Have you guys studied?
Yes.
Okay, who knows what is I-Etf stand for?
Me. I know what I-E-T-F stand for. I stand for Islamic, E stand for exchange, and T stand for trade, and the last one F stand for flight. Is it correct, Miss?
Good, Isma. Okay class, so let me explain briefly about what is Islamic Essential Fund. So it is a type of investment fund that aims to provide exposure to a variety of Islamic assets without having to invest in individual security. So for simple explanation, it is a unit trust that trades in Bursa Malaysia. Do you guys understand?
Yes.
Okay. Okay, right now I need it's okay. Isma and Anis, can you tell me the difference between ETF, unit trust, and stock?
Next, the differences between ETF, stock, and unit trust. Okay, the first one is underlying assets. ETF and unit trust can hold a variety of underlying assets such as stock, bonds, commodities, and real estate. Stock, on the other hand, represent ownership in a single company. And the second one is exchange trading. Okay, ETF and stock are traded on exchange, which means their price fluctuate throughout the day. Unit trusts are not traded on exchange, so their prices are only updated at the end of each trading day. Okay, and the third one is redemption. ETF and stock can be bought and sold on the exchange through a broker on the KLSE Kuala Lumpur Stock Exchange. Unit trust, however, are redeemed directly from the fund itself. And the next one is diversification. Okay, ETF and units offer diversification because they hold a basket of assets. On the other hand, do not offer diversification because they represent only one company. Okay, and the next one is price transparency. Okay, ETF and stock have transparent price that are constantly updated throughout the day. Unit trusts do not have transparent price as their price are only updated at the end of each trading day.
Another difference between TPF, stock, and unit trust is trade through broker. Yes, both ETF and stock are traded through brokers. This means you can't directly buy or sell them on the Kuala Lumpur Stock Exchange (KLSE) yourself. Instead, you need to go through a licensed intermediary, which is called a broker, who has access to the exchange, and you can place order on your behalf. For management fee, ETF and unit trust typically charge management fee to cover the cost of managing the fund. For stock, do not have the management fee. Next, the difference in brokerage. For brokerage, you will need to pay broker's fee to buy and sell ETF and stock through a broker, while unit trusts do not have broker's fee. For sale charge, some unit trusts have a sale charge, which is a fee that is charged when you buy the fund, while ETFs and stock do not have a sales charge. And the last one is the difference in cash settlement. Okay, when you buy or sell an EPF or stock, the transaction is settled in cash 3 days later, while unit trust transactions are settled upfront, meaning you will need to pay for the unit trust before you receive them.
However, there are several risks involved in investing in I-Etf, which is the first one is market risk. second one is tracking error, and the third one is discount and AV. But these risks can be reduced by aligning the objective of investing in I-ETF, whether it's a short-term or long-term, knowing the information on the index of I-ETF is tracking, and the last one is knowing the information on the specific companies. Okay, before we go into the process of I-ETF, first of all, we need to know how many the players' role involved in the process of I-ETF. First of all, there are 5 players' role in the I-ETF, which is the first one is the manager, the second one is the trustee, the third one is participating dealers, the fourth one is liquidity providers, and the last one is the investor. The first one is the manager. Their role is to oversee the fund and appoint the trustee. They have to manage the ETF so that it can be in line with the trustee and security law. Okay, and the second one is the trustee. They play a role as a safeguard asset and monitor compliance. The trustee acts as a custodian of the asset of the ETF. Moreover, they also make sure that ETF is administered in line with the trustee and security law. Furthermore, the trustee also needs to be a safeguard to the interests of the unit holder. Okay, the third one is participating dealers. They play a role as a create and redeem ETF share and also to maintain the market liquidity. Okay, participating dealers is basically one entity that facilitates in order to create and redeem ETF share. They also act as liquidity providers. But participating dealers is very active in order to buy and sell ETF share. It is because they want to make sure that the trading volume is always consistent. Okay, and the fourth one is liquidity provider. They play a role as the market makers and high frequency trading firms. Similar to the participating dealers, liquidity providers also contribute to the market liquidity by providing in order to buy and sell the order for ETF. By using the sophisticated algorithm, they rapidly buy and sell the ETF share in order to capitalize on the opportunities. Okay, and the last one is the investor. Investor, through the brokers, they will invest to the ETF units. So I think that's all from me. We will move on to the process of I-ETF.
For the process, the first and foremost is to choose which Islamic index is going to be benchmarked. Screening on the chosen underlying assets will be done thoroughly and must in line with Sharia. The participating dealers have to deliver the basket to the trustee in order to create units of ETF. ETF units represent underlying shares. These units of ETFs will be given back to the participating dealers and eventually be bought by the investor via liquidity providers. Having owned the ETF units, the investor can then trade them via a secondary market. At the time of the redemption, the participating dealers will accumulate and deliver to the manager and trustee the specified number of ETF units.
Okay, good. I think everyone here already familiar with I-ETF, especially the differences between Islamic exchange trades fund, stock and unit trust, as well as their process. So to summarize today's lesson, we can draw several key conclusions such as collaboration is key. For ETF are a compact ecosystem where different players, from managers and trustees to investor and liquidity providers, collaborate to ensure effective fund operation and investors' access. Next is efficiency matters. The presence of market market makers and participating dealers promotes liquidity and minimize price differences, making ETF a convenient and efficient investment vehicle. And diversification is encouraged. By holding a basket of underlying assets, ETFs offer investors instant exposure to diverse market and sector, reducing risk compared to single stock investment. Okay, I think that's all for today. I hope you guys understand this two subtopic in I-ETF. Thank you, guys.
For fresh graduate students starting their first job, investing in I-ETF can be a smart way to begin building their wealth over the long term. Here are some steps that they can take. Okay, the first step is assess their financial situation. Fresh graduates should first get a handle on their income and expenses. Create a budget can help them understand how much they can realistically invest each month. And then prioritize paying off any high interest debt like credit card, student loan and others before starting to invest. And the last one, ensure they have an emergency fund to cover unexpected expenses before commit to regular investment.
Okay, the second step is choose an appropriate I-ETF. Okay, and then it's consider their risk tolerance and investment goal. Beginner-friendly I-ETF tracking broad market index like the S&P 500 or MSCI World Index offer good diversification with moderate risk. And then the second one is research different I-ETF based on their expense ratios, underlying assets and tracking error. Look for low cost option with diversified holdings. And the last one is Sharia compliant I-ETF may be suitable for students with ethical investment considerations.
Step number 3. Select a brokerage platform. Many online brokers offer commission-free trading for popular I-ETF. Compare different platforms based on fee, user interface, and minimum investment requirement. Some platforms cater specifically to beginner investor with educational resource and easy-to-use tools.
Step for number 4 is start small and invest regularly. Instead of making a large upfront investment, beginner can start with a small amount, like 100 or 200 per month, and gradually increase it as their salary grows. This practice, known as dollar cost averaging, reduces risk and helps them build their portfolio over time, benefiting from market fluctuations.
Last one is seek professional guidance if needed. Consulting a financial advisor can be helpful for young investors, especially when navigating complex financial decisions. Advisors can analyze their financial situation, recommend a suitable investment option, and provide guidance on managing their portfolio. Additional tips for fresh graduates. Utilize employer-sponsored retirement plans like EPF to benefit from matching contributions. Prioritize financial education by reading books, attend workshops, or taking online course to learn more about investment principles. Remember that investing is a long-term endeavor. Stay disciplined, avoid emotional decisions, and rebalance their portfolio periodically to maintain desired risk exposure.